The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials right now down 140. Nasdaq is up 29. S&P is up 1. Gold contract up $7, trading at $17.13 an ounce. We have silver up 3 cents, $15.74 an ounce. Light sweet crude flat, $25.54 a barrel. Notes and bonds. You get the 10-year right now up 5 ticks, trading 139.04. The 30-year up a half a point, 16 ticks, trading out here at 180.10. And King dollar flat, also 99.921. The euro is at 108. The yen is out here trading at a 107, and the British pound is at 122 to 1 US dollar. Tom O'Brien, what's going on?
Good Wednesday morning. Lots going on in the market, as usual, right now.
No doubt. And we got a creeper out there. The creeper out there, folks, is the VIX. And we got to get over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, outstanding show. If you want to understand the option market, option strategies, futures, 11 to 12, Kevin and his team, they'll walk you right through all those different strategies. If you haven't test-driven yet the Thinkorswim platform, real easy to do. You're sitting on the website, you hit the banner, bring it up, they'll allow you to trade with paper money. Follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Well, I think that Jerome Powell finally has put to bed the idea or the theory of negative interest rates in the U.S. I think he was as definitive as he could possibly be. He used words like not considering, not part of their toolkit. All FOMC participants think that it's not attractive for U.S. monetary policy. So all the speculation about negative interest rates and the rhetoric that's been blowing up over the last few days, let's put that to bed, as we thought, actually.
Yes, and what Kevin's stating, folks, okay, he spoke at 9 o'clock, and he made it very clear, man, that, listen, no one knows whether these things work. You know, you get the pluses and the minuses, but the bottom line is that they're not in that camp, so... And just so you can understand that what that would mean, it doesn't mean that the market doesn't push them down, but the Fed is not going to go into negative. That's right. What he's basically saying. Right. You know, no doubt.
And you know what? Here's the things I liked about what he said. Just to touch on this very quickly, he didn't rule out that they'd come up with new ways of stimulating the economy through monetary policy. He just absolutely ruled out negative interest rates. But, I mean, just this week, we saw the Fed using its imagination where they're starting to buy ETFs on interest rates. And so, you know, they still, that is still a group of very intelligent people with a lot of ideas. They're just not willing to go to negative interest rates. And Jerome Powell said exactly what I thought he'd say, which is there's no evidence it works.
Yes.
I mean, and it hurts banks, which hurts lending. So the after effects are negative mostly.
Yeah, and you know, if you heard him, folks, which I thought was pretty cool. My take on business in general is that let's say that we know we have an economy that's shut down, but if you had a good business, he was talking about families that have had businesses for 2 or 3 generations that have worked really hard to get to that point. Well, if you get a liquidity crisis, if you have a cash flow, which the Fed is trying to do right now, you can get out of almost anything. That's what, and he was bringing that up, that, hey, listen, man, this is a cash flow for businesses that were viable that are going to have a shot to stay viable. And, I mean, what's so cool about him, Kevin and Tom, is that he seems to have common sense, right? I mean, when he's speaking, you can understand it. I can understand him a lot better than going back and some of those other Fed chairmen, I can tell you that.
Absolutely right. Yeah. He speaks in a very common tone. And here's the one thing to add on to your point. He talked about they're going to loan money, and the criteria is not how you're doing now. They're basing it off your 2019 earnings. That's the criteria for you getting loans and new money.
Yes.
So that's basically, were you viable and profitable in 2019? If you were, that's what they're going to base it on, not your current predicament that you're in. So I think that's really positive for the market.
Yes, no doubt. Now, let's, as I was starting this off, Kevin, we get the creeper out here, and the creeper is that VIX, right?
Yeah. If you listen to the TD Ameritrade Network, if you listen to Fast Market, which your viewers do, you hear me say all the time, the last hour of trading is so vitally important. Well, you saw that yesterday play out as they hit this market hard in the last hour.
Yes.
And so that's when I always think that final hour of the day is when this market really shows its hands. It slides all its chips into the middle. So I thought that was important. I thought how we finished and worked through today based on after Jerome Powell's comments is important. Let's see, the VIX spiking back up to the 32 level and holding right around 32 now after hitting 33. We'll see how that plays out. But volatility and an elevated VIX shouldn't be surprising to anyone in this environment. But you do have to pay attention to where you are on the calendar. We're now 2 weeks away from Memorial Day weekend and then summer trading. So a 32 VIX, it's going to take a lot to keep it up there.
Yes. And, this morning, what you have, folks, the Dow's down, NASDAQ's up, S&Ps are flat. But it's amazing. The S&Ps have already moved 50 points. It's like, I guess we really haven't seen a 50-point move in a couple weeks here, So it's like, okay, man, this is pretty amazing how fast it actually can move. And imagine if we back up like 4 months, it's like 50-point moves. It's like, are you kidding me, man?
Yeah. And if you think about it, what you just said, that is what eventually will start to wear on VIX.
Yes.
It's the fact that we got one day, but if we don't get follow-through with volatility today, that's not enough, right? It won't be enough to hold a VIX at a 32 level, which is a 2% move a third of the day.
Right.
So they need to keep that up if they're going to hold a 32 VIX, or gravity will take over.
Gravity. I love it.
And that, just to add to it, that VIX yesterday at 9:30 in the morning, the S&Ps fell basically about 100 points on the mark from 9:30 in the morning till 4 o'clock in the afternoon. So it was a huge spike in the VIX, 100 points. But we were up in the day, and this morning we're starting off, like you guys said, we'll see what it can do today to hold on to some of that.
Kevin, you know how deviant markets are now? I was thinking about this last night. We were talking yesterday about sideways markets, right? And last night I'm laughing at myself. I said, listen, that's a perfect question. I'm talking about, hey, we're going sideways, and then the last hour, bang, right?
Yeah. So much for sideways. The minute you think, and there's another lesson for your viewers. The minute you think you have this market figured out,
seriously,
you don't.
Seriously, right? Man, I'm telling you, I was laughing. I said to myself, "Oh my God, that's just how it works, folks. It is what it is, man." Listen,
if you're comfortable, get worried.
Exactly. 45 minutes from now, folks. Outstanding program. Kevin, you have a great one, safe one. We look forward to the program.
Thanks for having me on, guys.
Thank you.
Thanks, Kevin.
Stay right there. Tommy and I are coming right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 155, Nasdaq's up 27, S&Ps are up 1.5. Let's just go into that index for see what is happening inside this NDX, Tom. So the leaders out here, you get JD.com is up 4.2%, Zoom 4%, NetEase 3.6%, and Regeneron 3%. Taken away from it, United down 5.5%. You got Cognizant Technology up 2.5%. Exelon is off 2.6%, and NXPI is down 2.5%. If we take a look at this future as to where we've been, the NDX, folks, is right where we just came down hard yesterday. So we'll see whether that baby can get over this 91, basically 69 area. What you have out here in all the indices, folks, is that when we came down fast and furious when Powell started talking, that's a high volume low. So my take is that that's where we're going to basically be making our way throughout the trading day. Oil, Tom, right?
Oil. It's Wednesday, as if we don't have enough going on in the market right now. Okay. We got oil inventory numbers at 10:30. We get the contract right now, 25.52. Yesterday, pretty tame action, even at around 2:30. Not too much volatility, as in within $1, right? 25.20, you could call the lower end of the range, $26, so your upper end right in the middle of that. So let's jump over to the platform, see what kind of, premium they're pricing in here. So we're trading at 25.50. You have exposure from 25 if you want the dailies. I'm just jumping around for a moment. So you could have exposure from 26 if you wanted the 230s here. Let's just see what the noons line up. 25.75 is an option. I'm just curious on the daily side because it's nice to have exposure till 230 with how crazy oil's been trading anyway, especially as the 230 end of day technicality kind of approaches. We've had some real volatility, especially last week. So let's just see on the bullish side. If you're bullish, you're going to have 56 cents of intrinsic value, and you're going to pay, not a bad trade if you're actually going bullish on crude. The contract's trading at 25.84. The underlying's at 25.56. So what are you paying? 30 cents, give or take, to have a defined risk down to $25? Not that bad with oil coming out
Right.
in my opinion.
Right.
And let's just see on the bearish side where you're going to be basically huge out of the money and you're paying 29 cents if you really wanted to take a shot at some negative prices. You got a lot of room to make up there with 80 cents before you even break even. But
okay, so we get the whisper number up here.
okay, I just pulled it up. Not as big as recently, right?
No.
They're only looking for a rise of 4.8 million.
Yeah. And then the survey's 4 million.
Yeah.
I'm going to go 5.2.
Okay.
Would that be right there?
That would be right.
Okay, so I want to make sure. I'm bearish, so that would be that, yeah, more oil, right?
Yes, you would see a build of 55.2 million barrels versus a build of anywhere from 4 to 4.8, right? So you see a slight rise in the supplies. More oil around for the same demand, just walking through the economics of it, right?
Yes.
You have those two curves meeting. You have a bunch of supply now. Well, what is everybody going to pay if you all of a sudden have a bunch of supply? The price is going to have to come down to sell that supply.
Right. And you can see when we bring this chart up, I'll show you why, folks, okay? So this has had a, nice bounce. I mean, we had that low out there, $6.50. You're right up to ice, and you can see this contract. There's no buyers up here, man. I mean, this is like a contraction of volume that's amazing, and this is the active contract, folks. When I first pulled it up, it says, "Oh, this doesn't even make any sense." Yesterday we did 212,000 contracts. Today you're at 42,000 contracts. That's very unusual, folks. And what we could be seeing here, Tom, is that because of the way that oil got so skewed, there's probably plenty of traders that are saying, I'm not dealing with it anymore. That's what we might be seeing there. And you wouldn't know that, folks, for about another month, because if the volumes had gone down that dramatically, well, that's okay. That just means that there's a lot less traders that are dealing with it because of the fact that they can't figure out in a risk-reward scenario where oil wants to go.
Do you think the trader in that Bloomberg article that bought 212 futures contracts at a penny and woke up with a $9 million bill, is he still in the market trading oil, you think, this morning?
Exactly.
Man, oh, man.
And that story, folks, okay, just so far over the top, it's unbelievable. And it's real. Do you know what
Thankfully,
I mean?
investment, who is it? Investment Broker, it's blanking me. Investment,
Interbrokers.
Interactive Brokers,
Right.
Thank you. It seems like they're going to cover it, and they should, because I'm pretty sure they would have lost in court on that one anyway. It seems so egregious in terms of not allowing to display a negative price for oil when the whole world had talked about it and knew about it, and they even sent out the testing capabilities for your platforms, all that stuff.
They did,
and they couldn't even factor in. I mean, think about the number of high-level, brilliant people that go into programming how margins work in a system like Interactive Brokers, right? And then to not figure out that, has anyone checked whether everybody's margined for this going negative? Just didn't happen.
Right. And what Tommy's talking about, folks, this is really, you really want to understand this. The CME and the ICE came out a week prior to negative, gave a notice to all the broker-dealers that you better be prepared that oil can go negative.
Yes.
And what ended up happening is that they didn't pay attention to it. Out of the story, what happens, which I really can't understand, is that, like, if you're in a TD Ameritrade account, folks, okay, you're not going to be trading. They don't allow you to trade it the last week because then you have to deliver it. I didn't
understand that part of it as well. I said, why are they allowed to trade a deliverable oil contract when the guy started off with $74,000 in his account, whatever it was, and he was buying hundreds of them?
Yes. And if you get it delivered, just so you understand, it's not like getting gold delivered or anything else. If you have enough money in your account, okay, the bottom line is the money comes out of your account, then you still got to take delivery, and there's certain parameters that you got to do to get delivery. Oil is a whole different ballgame because you just don't put the money in your account and go get it. You need to have a deal with the pipeline. You got to have a deal with the storage for the oil. So it's like, he owned up to it. They missed the mark, and that was probably just laying out there forever, and they never got burnt on it. So
it had never gone negative, and you could see why to an ordinary individual, yeah, it makes no sense. Of course, you didn't see it coming. This is Interactive Brokers, man. You know, they're one of the biggest brokerages out there. Ads running 24/7. People getting paid millions of dollars to run that company. Come on, get on that. And guess what? They're going to pay the price, man, because it's, $100+ million that it's going to cost them?
Yes.
Well, right. Good. I'm sure it wouldn't have been as expensive had they just got on their horse and been prepared when that happened.
Yeah, no doubt. So S&Ps, let's take a look at this, because when Powell did come on, folks, this was a very fast move. What the S&P was trying to do is get down to the lows of last night. Now, there was a little spike low last night of 28.25.
Okay.
Excuse me. We got down to 28.32. Now, yeah, 28.32 right now is still a high volume low. So my take is that we're going to go there. The real question is going to be, do you blow that away? So,
and it makes sense, right? Negative prices, just negative interest rates. If the whole point is to incentivize people to take out loans, businesses to take out loans and spend money on capital.
Yes.
If you're not going to do it at 0%, are you going to do it at -1?
No.
No, you're not.
No.
So, yeah.
Dow down at 207, NASDAQ up 18, S&P's down 3. Tommy and I'll be right back with those oil numbers, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing up positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. This is quite a number, Tom. Oil inventories fell 745,000 barrels.
The economy must be back to business, man. We're blowing through those oil reserves at a record pace and depleting them.
So watch this, folks. Okay, the median estimate was 4 million. I went 54 million. No, I went 5.4 million.
52, yeah.
And this is minus 745. So what's happening in that oil market out there?
Price is trading higher, man. We were sitting at about $25.50. The number right at $26. So you got about a 50-cent pop in the price of crude, right up to that $26 mark. We've kind of been flirting with that high of $26 in the current price. Well, we're testing that level right now in the price of crude. Remarkable, man. If you had said, the stockpile is going to increase or decrease, but guess what? I guess those spigots have turned off, if at all possible, because who's producing oil, like we talked about, when you're selling it at negative $37 a barrel?
Yeah. Now watch this, folks. This is pretty cool. So the S&Ps, right prior to this, folks, the NASDAQ futures were moving higher. The S&Ps moved higher on this number. Now, that being said, the oil stocks aren't moving higher. Okay, let me watch this. I'll go over the NASDAQ. I mean, the ExxonMobil first. You're going to see we're still down 134. You go to Chevron next. So as you're breaking down markets, folks, this is important to understand because you can get the pop in the S&P, because traders are basically speculating that if oil numbers are that dramatically lower, they're going to start buying the oils. Well, they're not. So it's pretty amazing. And if we'll go to the NDX first, because, we talk about this a lot. The NDX can basically bring markets higher, lower, all of the above. And you can see right before this number actually come out, that NDX was moving and, moving with conviction.
Yes.
We go over to the S&Ps, and you're going to see that little baby, moved on these oil numbers. And, it was moving before that, but the bottom line is that we went from 28.47 to 28.66. That being said, guess what? I suspect the same thing which I said prior to us going on that break, that this thing wants to go after this lower number. So it's going to be pretty wild watching how this is going to shake out. Gold out here, bottom line is that this just keeps edging higher. We got big volume in this contract out here today, folks, okay? You're talking 127,000 contracts already. So more than likely, it's only 10:30 in the morning. More than likely, you're going to get over 200,000 contracts today, which is good contract volume. This thing wants higher price, and I suspect what that's going to be all about is the amount of stimulus inside the whole world markets, not just the United States, folks. It's the world in general,
Sure. Hey, can we jump over to Uber and
Yes.
Grubhub a bit just to take a look, man? I mean, pretty cool story when that broke yesterday, just talking about how things are changing. Uber buying like their biggest competitor out there, right? Grubhub.
Yeah.
The market loving that idea, trading from almost $30 up to $34.50. When the market fell apart, Uber did as well yesterday. But just remarkable, man, in terms of thinking about, I was talking about on my show this morning, right? Uber and Lyft, I'll be a bull on them long term, man. They're changing the way the world operates, ride sharing, all of that stuff. Just think about when self-driving cars become a thing and they don't have to pay people to drive around their fleet of vehicles, and it's happening, folks. But what a leg up Uber has on Lyft, man. As Uber talked about in their conference call, just that it's been an explosive time for Uber Eats, as we all can imagine. And now they're going to buy Grubhub. They're going to dominate that market, man. And Lyft, they probably decided, I don't know what the fundamental take is, that they probably couldn't compete with Uber in that arena, maybe just yet or something. But they're missing an opportunity, man. And Uber's just, I think, stepping on the gas pedal when they're going to pick up. Because who is even else out there? DoorDash.
Yeah.
But who else is even out there? Those are the number one and number two.
Oh, yeah. Uber's confirmed ABC up. I mean, this took out the B point. See, a B point on this, folks, $32. And let me show you something, man. This is pretty cool. When I talk about how you're trading into a swing point. So what? Someone always knows something, folks. And I'm not saying it's illegal, just in general, okay? So watch this. The swing point, Tom, on the 29th of April was 28 million shares traded, high of 32, okay?
Yes.
So you pull back. Now, you pull back, folks. You pull back with 23 million shares. You're going into 52. So that's saying, okay, there's not a lot of sellers. But watch this. You see how we didn't even take out the swing point, but the acceleration of volume last week on the 7th, 62 million shares. You hadn't broken the high yet, but you were going into 28. Then the following day, there's your ABC, 69 million. And that wasn't even announced yet I don't believe it was yesterday it was announced, right?
Oh, yeah. It broke middle of the day yesterday,
right.
yeah.
So you can see how this works, folks, when you're pushing into swings. And what you'd like to see is that if you get the acceleration of volume before you get into the swing, most time that's where that stock's going, man. And, in this particular case, let's see, you get B points 32, your A is 2167, so you get like 10 points, which gets you a 3758. Yeah.
I think 36.
Yeah, that's a good number, man.
Oh, yeah. And what I look at Uber, and I say both of them are going to get there. Lyft's going to take longer. Lyft is smaller. They're not going to be as profitable as quickly. Before all this happened, Uber said that they were going to be cash flow positive by the end of this year.
Right.
I almost compared it in my head, right? Because I heard people talking about it in the den, and they're making great points, man. You have all these companies that are trading on multiples that haven't even turned a profit yet, right? Going to the market for money, all this stuff, as in buying other companies when Uber hasn't even become cash flow positive yet. But I put Uber in a different category. When you're literally 6 months, maybe 9 months away from turning that corner, right? You're a public company. You've almost Uber's a verb. It's not often that you say I'm going to Uber, I'm going to Google something. You've become synonymous in that area. So for them to be so close, it almost is like you talk about when gold mining companies are right about to come to production. Right? They get that area where they start trading from multiples of an exploration company to a company with actual earnings and potential. We saw what Amazon did when they turned that corner and started being. And I feel like eventually, and guess what? This is going to take some time for Uber. Maybe it's a year or two that things get pushed back, right? But if they're spending their money and not going cash flow positive by buying any competitor that's in their way, man, that's a strong business plan to dominate.
And as you said, Tom, and you've been bullish on this since the crash. There's no doubt, man. And
I can't believe it went down to $13, man. And right when he came out, the CEO, when it hit $13, he said we're going to have like $2 billion to $4 billion at the end of this year, even if our business dips 80%, which it has. But go ahead.
Now look at these numbers. This is what they were talking about, folks. Uber plans on going from $12 billion in gross revenue this year to $18 billion next year.
Yeah, and really, what I always keep it's hard to comprehend how they're probably changing the world, because none of us can imagine a robot in a car driving over, picking us up, and all that's coming in 10 or 15 years, man.
Yeah.
And 10 or 15 years is not a long time when you think about the dramatic change that could occur over that period. And I think it's probably faster than we all realize.
Well, and when I was listening to you and I was driving down in St. Pete yesterday, right? I'm saying to myself, okay, man, at the beginning of this, it's going to be probably like a bike lane. This St. Pete's a major city. It's like, okay, why can't you make another lane? All these little robots are running around in another lane.
It's going to change everything. You don't need parking. You're not going to need all that stuff. It's going to take time, but this is accelerating it. So in the long term, it's great for a company like Uber that everyone's going to be.
Stay right there. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 137. You get the Nasdaq up 54. S&Ps are up 7.5. Let's go over to our man, Mr. Teddy Cakestat, as we do each and every Wednesday, folks, at 40 past the hour. You can reach Teddy every trading day at forex-trading-unlocked.com. That's forex-trading-unlocked.com. Teddy Cakestat, what's going on, brother?
It's a quiet day in the currencies. That's what's going on.
Quiet day in the currencies. Hey, let me ask you something. I forgot the correlation, the Swiss franc, right? The correlation of the Swiss franc and the dollar were at like 97. So what happens when it's at par?
When the U.S. dollar is at par with the Swiss franc, well, that was something that it's having a lot of trouble trying to do. That's for sure.
Right.
But when it does that, you got to remember the U.S. dollar and the Swiss are both flight to quality currencies. So when the U.S. dollar gets above parity, that starts to show the weakness as far as the Swiss globally, as far as the flight to quality currency, for sure, once it gets above parity.
I see. Okay, cool. And I guess the British pound, right? That looks like it's taking some heat here, right?
A little bit, it's kind of funny because if the British pound had a really nice bounce from its low from a month and a half ago, and it set up just had a lower move swing high, and it has kind of a head and shoulders pattern. And if you look at the most recent major swing lows in it, that sets a nice little neckline, but it's really wedging. Like it already took out the neckline, but we're not getting any real selling pressure.
Okay.
So and I think if you people, when you look at the dollar index, like right now, it's really settled into a consolidation range. And I think that the pound is doing the same as well, because if the head and shoulders pattern would work, we should be already seeing the market really selling off and starting to bang new lows that it hasn't seen in basically the past 2 months.
Right.
Since we're not doing that, I think you got to remember Brexit is still going on.
Yeah.
The ECB is acting contrary to what the BOE wants to do.
Okay.
So when you have that conflict, I think that's where we're actually getting stability with the pound, whereas with the euro, there's weakness, but the ECB is willing to come in right now. They're just kind of have a little bit of a stranglehold on them. You know what I mean?
Yeah.
And the EU is actually coming out of lockdown and where they were locked down and seems to be doing all right, whereas in the UK things aren't exactly moving that quickly. So it's a big tug of war right now with the major currencies versus themselves. Like for instance, if you look at like the euro pound cross or the euro Swiss cross, those are markets that have been trending, for the past few months as well.
Yes.
Some of those markets are trending, but they're not versus the dollar. They're consolidating versus the dollar.
Okay.
So that means that to me, that tells me that besides the fact that there's dollar strength, I mean, the coronavirus trade for the dollar, I think, is pretty much over unless we were to have some major resurgence of cases and all of a sudden shutdowns globally. But if that doesn't happen, which hopefully it doesn't, we've hit the upper boundaries of the bullishness for the dollar, where the dollar was driving the trade globally. Now we have divergence. Like you look at the Australian dollar versus the U.S. dollar. That was one of the first currencies to bounce. First, it looked like it was a correction. Well, now it's been rallying for 2 months. So even though it's overall in a bear market, it's been a bull for 2 months, and you can't deny that, even if it's grinding now.
Yeah.
But now,
I mean,
like when I said the correlation.
Yeah, percentage-wise, 55 Aussie dollars, folks. Now you're at 64. That's a monster move, huh? Holy cow!
Right.
Yeah.
Now all these currencies, especially the New Zealand dollar, they were trading in tandem. Now we have divergence finally coming. Like where if you look at like the Australian dollar New Zealand cross, the New Zealand dollar is getting crushed by the Australian dollar. Okay, so that trend is not stopping. And you can see how the Australian dollar right now, like I said, has had this nice bounce. The New Zealand dollar is not making higher move highs and higher move lows. It actually just made a lower move high and a lower move low. So now we're starting to see that kind of a trade develop.
Yeah.
So I like you said with the Swiss, like if you mentioned parity, we're hitting boundaries with the reserve currencies of flight to quality, like the dollar and the Swiss. There's really not much for them to do, but for the other currencies, that's a totally different dynamic, and I think that's where the trade really is going to be. Because I wouldn't doubt it. Like remember, the euro US dollar was stuck in a $4 range for almost a year before all of this. And now it's been in a $4 range for basically the past month and a half. That could stay for the next 6 months, 8 months. We could be stuck in this range with the euro US dollar, but not like, sorry.
What got you involved, in the currency market?
Initially, my biggest thing was when I first started on the trading floor, I was working in the OEX, then in the S&Ps, and I would watch the interest rates because the bonds were the first thing that I started to trade.
Right.
And I knew that what are the components of the major things? Like you have gold, you have interest rates, and you have currencies. Those are the dynamics that ebb and flow in cycles.
Yeah.
Whether it has nothing to do with geopolitics, those ebb and flow in cycles. The stock market is a totally different dynamic, and I would see how when we would have big moves in the S&Ps where interest rates aren't moving, but then all of a sudden you see these huge currency moves. Yeah. And I'd be like, well, where did this come from? Okay. And then I would start to see how the dollar, it's the question is, does the dog wag the tail or does the tail wag the dog kind of thing? And that would be the thing was where, the S&Ps is too broad to sometimes get a hold out of, and especially the volatility on any given day. But you get trends, but they're hard to manage. Currencies, you catch trends, and they're very easy to manage once you're in them. I mean, unless you do make stupid, undisciplined, mistakes.
Sure.
So that's really what got me into the currencies.
That's pretty cool, man. So you were one of those guys taking all my money in the OEX pit, huh?
Well, no, that's where I started as a runner when I was 18. I was just clerking in the OEX pit. I wasn't trading in the OEX.
Let me tell you something, folks. The OEX, oh my God! You'd either go to hell or you go to heaven, man. I mean, I love trading it, but I'll tell you, man.
I used to work for Pershing on the floor there in 1989, and the reason I was in the OEX pit was because United Airlines. That was when the takeover bid was going on there, so that post was just jamming. Yeah. And I was tall, and I was a hockey player. My desk manager is like, you're bigger than the rest of our guys here. He's like, how about you run the OEX? Can you pile drive through people? I'm like, sure. I can get your orders in.
Oh my God.
It was crazy.
Yeah.
So
no, it's so cool, that explanation about the currencies, because you always read about, the guy that owns the Red Sox, right? I mean, they're trend followers, and it seems that the currencies stay in trend much longer than anything else. Meaning with the vehicles that we trade, you can kind of go through the vehicles we trade. Yeah, that's intriguing, man. Yeah.
And you know what? There's only so many variables that can dominate your view with currencies. It hasn't. Currencies are not political. Whatever dollar or currency you're talking about, they don't care whether you're a Democrat, a Republican, a communist, a socialist. They don't. It does not care. Yeah.
So cool,
it's a good
Teddy.
thing.
So cool, man. I'm telling you. Well, listen, we appreciate the education, and every trading day, folks, you can reach Teddy at forex-trading-unlock.com, forex-trading-unlock.com. And, the bottom line is that it is really intriguing where the euro, is at the top of the range and the pound's at the bottom. So, okay, man, is that going to be it? Or is one of them going to crack, right? Yeah.
I think we're going to see a move, but just not for a while.
Yeah. Okay, man. Have a great one. Have a safe one. Tommy and I look forward to speaking to next Wednesday.
Take care, guys. Thanks a lot. See you later.
Stay right there, folks. Come right back. Dow down 155. NASDAQ is up 31. S&Ps are up 3.5. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability. For the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 177, Nasdaq's up 23, S&P's up 1.5. And if you take a look at even the NQs, folks, what you're going to see out here, this is a major failure. Bottom line is that it tried to make the run, couldn't handle it, got back inside the lower range, and this high volume low is still game out here. And if you want to really understand how to bisect and dissect these markets, we got our man, Mr. Larry Pesavento, coming up a week from this Thursday, Tom, right?
Yeah, well, a week from tomorrow, right?
Wow.
A week from tomorrow.
Yeah.
Thursday, May 21st. So Larry's going to be in there trading live all day, man. Trade what you see, a live trading event. He'll be in there from 9 a.m. till 4 p.m. You can sign up on the front page of TFNN. He'll be talking about basically how he looks at the markets, right? Whether he's talking about the Dow, E-mini S&P, crude oil, gold, T-bonds, wheat, soybeans. You get some currencies in there, the euro, dollar, pound, dollar, yen. You gain access to Fibonacci 24/7. That's almost $100 value for a month. You gain that instantly. Current subscribers, you can take that month and apply it to your subscriptions. You add those savings. A week from tomorrow, check it out on the front page of TFNN. Larry Pesavento, Trade What You See, a live trading event. I'm going to be in there when I'm not doing my show, man. That is for sure. And I encourage everybody else to be there as well.
Right. And it's so cool, folks, because what you're going to see, the risk-reward ratio, the way Larry does it, and he'll pop up on the screens. He's got the fib numbers already programmed in there. As they hit them, little alarm goes off.
Yep.
The pattern is there. He's either buying or selling. The stop's on the other side of it. So, I mean, it's very organized. Really pretty cool deal of how these alarms basically go off because the patterns take a while to set up. But the bottom line is that, they set up, you're off to the races.
He's setting alarms on his charts, right? When it hits a certain price level, boom.
Yeah.
You're in, you're out. It's telling you what to do. You're placing the orders. I can't wait, man. Next Thursday.
Fire them off, baby.
That's right.
Stay right there, folks. We got Think or Swim coming up next. And I'm Mr. Basil Chapman riding that wave. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.